All right, what's up, guys? It is time. It is time. It is time. It is time. At least I think it's time. It is time for, well, at least the London session to begin, or the European session to begin. It is time to look at Euro and the British pound. Those are the two that I watch, and it should be, especially the ones that we watch at this time. If you watched my video some earlier, you know what I was talking about watching the pound kind of slowly drift down and then eventually start going back up once we got into the London session. Now, I think we may have. I think we may have found the spot. So, if you know what I like to look for, I like to draw. I like to find that last spot of balance, right? Draw the fib, and then whenever it rebalances, it should rebalance right around that 70.1%. Now, with the GBP USD, right? Here's that last spot. You can see came up, came down. Here's, balanced once, came up, came down, balanced again. So here is an area of balance, right? And then it took off. So now we're waiting for it to rebalance. And that rebalance usually happens where? 70.5%. I mean, nailed it dead on. So it came up, right? It's making a little curve. It's looking like it may go back down, right? I'm not convinced because all of my technicals tell me I don't see a liquidity draw down here. I just don't. All right, so here, let's do a 1 hour analysis really quick. All right, like I said, there is a fair value gap down here. There's an order block down here. If it ever reaches back down here, I would expect it to, of course, go through that fair value gap, hit that order block, and then take off. And I don't think that's what's going to happen. Instead, what I think is going to happen is I think we're good where we're at. Because I think we've rebalanced, right? And didn't mean to move the fair value gap thing. See, whenever I think of liquidity draw, I think of a reason for price to come down here. And I'm not seeing a reason for price to try to come. I mean, I get it. There's probably, there's probably people, that stop it. There's probably a lot of, buy limits set up down here. There's probably a lot of, also, once you get down below this, you probably got a lot of sell stops just below this. But I'm not for sure if it's enough to want to go that way. That's a pretty long drop, right? Whenever you have, right, your daily high that's right here, right? Obviously, we've already proven that we wanted to go higher, right? So our bias, to me, the bias is high. So that's the main point. You want to try to find a bias, right? So if you don't have a bias, you really don't have a reason to trade, because otherwise you're just going to be guessing. You're going to be guessing wildly about what to trade and how to trade it. So you got to have a bias and stick with that bias, right? My bias, if we want to go and look at the weekly, I'll show you why my bias is bullish. Well, it's because, for one, price tries to draw itself to beat more highs, right? At least in this kind of environment that we've been having, right? Yeah, we did have a huge, drop like way down here. I remember when that happened. That was like back in that was March. Never mind. October was like over here. Yeah, never mind. So this is back in 2018, actually. So if we're looking at biases, we did have the week where it went down, then it went back up. So you had that turning point right here. I guess you could say kind of like a turning point, but it's almost like a swing. You go up, you go down, you go back up, and generally after those, you continue to go up. Sometimes you get something like this, but generally, usually you'll have a swing, right? And you go down, you usually have a reason to follow something until it gives you a reason not to, So we went down, we went up. Here we closed lower, we came down, right? We hit a bullish order block, we came and hit, kind of areas of balance, whatnot. And then now we've been moving up, and my thing is here we do have monthly equal highs, but we've already broken them. All right, so honestly, I should probably get rid of this monthly equal highs in this right here, because I was drawing it out for myself to say, hey, here's a high here, here's a high here, and I was looking at that back here, saying we're probably gonna go up and above those highs. Well, we did, right? Now we have we have 2 weekly highs right here in a row that we have just touched with last week, right? So which tells me we're probably going to try to break those highs as well. And as we break those highs, we're going to try to continue to go higher. We may get a little bit higher than this point right here, right in the middle. I think eventually we're going to get up here before we start pulling way back down. But as a general rule of thumb, I'm just looking for my bias. My bias is telling me that it is going to go up. GU is going to go up. That's not counting fundamentals. Fundamentals could, especially with the British pound, it could go either way, right? But my fundamentals are telling me that it is going to go up. So that being said, let me bring it in a little bit closer. Again, we started the week with a gap, went down, hit a certain point. We actually broke a lot of daily lows through that gap to hit this point. There's a couple daily lows below here, but it's nothing I don't think it's going to stretch for, especially since we've already stretched. Like I said, once it got up and above, well, for one, once we broke this kind of like intermediate high, that's how I knew eventually we were probably going to end up going higher. And then again, this shoot up right here, broke all these little intermediate highs that we've had. And so this is telling me it wants to go higher. I don't see anything that's going to tell me that we're going to break down further, into this area before it gets higher. Now it could. It absolutely could. It really could. I'm not Nostradamus of trading by any means, but I am thinking that since it is, the bounced right here at about 11, right? It was right around 11 o'clock, and now it's taking about an hour. It came around and bounced around the same spot, and it didn't get lower, and it's right around that point where I like 70.5. I'm liking the idea that we're going to continue upwards from here, right? I'm liking the idea that our bias is going to continue moving up. Now, some of you are looking at my fib and you're going, well, you got spikes here, but you don't have your fib through it. Okay, so if you don't understand or haven't been taught how to place your fib, especially for entries for smart money technique, you do it on the bodies. You do it on the bodies because the wicks can differ. Everybody's what do you call it? Broker can differ. So FXCM can differ from Forex, can differ from Rwanda, can differ from, wicks can be different, all the time. But if you measure them at the bodies, they're all probably going to be about the same volume in those bodies, right? So you could have a huge wick up here, that one broker had that somebody else didn't, and if you measure from here to that wick, you could be thrown off a little by about where your golden zone, or your zone that you want to enter, is going to be. So here you measure from the bodies, right? You go from the last bounce point, which I found was here, right? That also had a very, very big spike up, right? So you had this coming down here, then as soon as it hit this, boom, goes up, okay? That right there, that's a displacement candle. This tells me this is where it's going to go up, and this is where I'm going to place my fib. And you find the top, okay? Or if you don't find the top, you also find a place that does have a displacement that goes really, really hard down. So you could have like a really, really high top, but then it comes down, and then after it comes down, you kind of have like a little displacement fib. And I can show you that, I think, on XRP in just a second, what I'm talking about. So that being said, we come down, we hit the 70.5%. At 70.5%, I am personally thinking, now that we are here, our pathway is this way, right? We're probably going to see, a little bit of struggle, like hitting the bottom of these, coming back up, and then maybe getting across, some of these liquidity points, like new liquidity points that I haven't drawn, I should say, and then coming back up, and then hitting some of this, and then coming back down, and then hitting some of these, and then eventually going back up. And let me draw this, but I think eventually what I'm aiming for not is the one. I'm aiming for right now the double of basically the asymmetrical point of what this, so from here to here would be the 100. I'm aiming for double of that, so here to here. The reason I'm aiming for double of that, one, it's gonna be the high, basically, or it's gonna break the current high that we have. So I think liquidity is drawing us to that high, right? And to be honest, I probably should paper trade right now. Uh, 32860 will be stop loss, just because I want to give it some room. I know it's a big room, but there's a lot of order blocks and whatnot in that way that's going to prevent it from going up. Because if it gets below here, I'll set up another trade for down here. But I don't want to. I don't know. I don't want to let it get all the way down here and then just have the prospect of it come back up only here, and still, I guess I would still be losing money. But if I get it to just down here, 32680 or 32860, I could set up. I could not lose as much and then enter again right around here, and then make more on my way up, probably get more than break even, take profit. I am going to number one here. Let's go 36380. So I am putting myself at a 2.5. So that's about a 2.5 risk to reward ratio. And I didn't exactly get it at the point where I wanted it to be. If I had entered exactly where I wanted it to be, it'd been a little bit down here, but it's still at a good point. And I need to take a look at the euro really quick because it's also doing the same. In fact, I may have to rethink this because, like I said, I think the euro is going to be moving a little bit more sideways than anything. And even though this is a rebalance, see, this is a balance point. It rebalanced, it comes up here, it kind of half balances. The euro kind of has me a little bit befuddled. But if I wanted to kind of look at the rebalancing of this, yeah, it's right at about the 80 point, which is a good, that's a good point, But I'm also seeing this here. Oops. I'm seeing this here, this come down and then boom, kind of up kind of movement. And this is what's telling me I should probably think about this instead, right? If I'm thinking about this instead, then I got to think about, okay, well then where is my, because you have more bearish movement. Well, actually, no, you don't, because this would be considered your down order block. This would be your consider these are consecutive candles. Consecutive candles that don't wick outside of each other are considered one block, right? So this would be one block, this would be one block, this one is bigger than this one. Thing is that this would be, and it's almost right on top of it. This would be your order block right here. So let me draw a horizontal line right here. That would technically be the top of your order block. This would be the volume though. Is there anything else? Let me get rid of some of these other things that could be confusing you. Right, okay, so let's see where it's at. Okay, it came down just to the top of this. So, if that's the case, it could be this, and we could be right at about the 80 to 75%. Either way, again, the magic is not in the fib. The magic is in where your balance is. But I just like having my fibs placed at the right place. Or at least I feel like that, like as long as it's below this, the 68, I feel more comfortable knowing that that's where to trade. Okay, so, and that's why, but then, and I like doing it at areas like this to where it's a strong move down, a strong move up. So that's what's making me somewhat rethink, not really rethink, but don't think I'm going to trade here just yet. I do think I want to let it get down a little bit lower, because if I do have it placed here, and this is my, I want to say, the volume of this is my order block, then I'm more comfortable in that zone there. I'm more comfortable trading in that area. But then again, euro is also not too expensive, especially if you're playing with low lot size, so I could technically throw a low lot in there. And then also, put in a limit as well. And whenever you're doing something like this, you want to, generally, if it gets below, you want to, the lowest you want to put it, like your stop loss, especially for euro, about 10 pips below, right? 10 pips below this, just to give you some room in case, it spikes down really quick and tries to take it out. Usually it doesn't get any more than 10 pips, 12 pips. 12 pips definitely to be safe. If you want to do something like that with GU, find that low spot, do about 15 to 20 pips for GU. Usually it doesn't spike down any more than that if it does. So, but I put it way down here, just because I want to have this be on my side in case it does come down to this right here, these order blocks. I think these order blocks will save me, even though you don't really see much. See, I was thinking about this and I was like, well, it didn't really rebalance, whenever it did have this fair value gap. But then you look through the left and you do have kind of this order block moment that happened over here. So the balancing did kind of take place, because whenever it came back over here and it touched down, it was touching down kind of on top of, these areas right here, to where the 1 minutes were kind of like guiding it, and this was kind of the balance area. So even though it looks like a fair value gap, looking to the left, it looks like it was kind of taken care of, right? There wasn't much room. So that's why I'm not too scared about this coming all the way down and having this as the meat of my trade here, right? So Euro USD, same thing. Still kind of doing it. I don't know. I guess I could put in a small trade, 1,000 instead of 5. I'll just go ahead and buy now, and then we can change, take profit here, take profit. I want to try to get, see, this is what also kind of scares me, is that generally your extensions line up with something that would be equivalent to, a high. This is the one that I do like, though, is that your double extension is about at the daily bearish order block, right? So we were to go from here, I would expect it to at least pull down a little bit more, though, for that to happen. Now, if I'm going to change it to the last one, see, these kind of like, well, at least this one lines up a little bit better at 0.62, but the daily order blockish doesn't. So that's why I like this one a little bit better. But then again, that also makes me feel a bit more comfortable about putting in my bid now. That being said, I will, instead of putting 10 pips below that, I do still think I want to put it about 10 pips below this. So 2-1, let's just go 2-1-800. So stop loss, and even then, that's not that bad of a stop loss for euro. It's only 40 pips. And then take profit. Oops, didn't mean to move that. I want to go for this asymmetrical, which is also the daily bearish order block. So if I want to be a little bit conservative, 23060, and that's being a little bit conservative. So let's go with 23060. So I'm basically doing a 2-to-1 on that one. As to our GBP, it was about 2.5-to-1. So we will see, we'll see if that pans out or not. And since that is the case, let's also check out Euro GBP. Why am I on crypto over here? I have no idea. and it did not get up to where I thought it was going to get, which means that I still think, well, let me see here. Let's look over here to the left and see what we got going on over here. Here it is. Okay, so we do have kind of a bearish order block here. So let's mark this. Okay, so it makes me feel a little bit better, but it still makes me think that euro, right? Well, what this could mean is that the euro could push up slightly against the pound, or at least maybe the euro would go up a little bit quicker when the pound is just kind of staying still, which, you know, and that's how I kind of look at these. I try to see what the euro is going to do versus the pound. I think if the euro is going to stay still and the pound is going to grow, this has more of a chance to take a dive. And I've been waiting for, and I think probably this right here was probably the best bet that we had to make a sell. Because it was probably right around that area. Yeah. The question is you know, what would be our stop loss? That's the question. What would be the stop loss if we were to go ahead and try to make a sell on euro? And I'm going to put a small lot in here too, since I'm already a little bit late to the party. Usually I would do something like this, but that's pretty high. 19623. We're at 192. The thing is I don't really have a good gauge as to what you know. I haven't really drawn a good fib for this to give me a good gauge as to where I should and shouldn't go, but I will draw one. Here, let's get rid of all this stuff off the table, because I know that can be kind of confusing for everybody's eyes. I realized I left a message up earlier for everybody to see. Somebody asked me if I trade by myself or something like that. I'm like, yeah, I forgot I left that up there for you guys. But alright, so go from here down to here. Oh, look, yeah, it came right back up, and guess what it touched? Touched at 7.5. So, exactly where you want it to be. So, 91605 is going to be my stop loss. This is about a little bit more than 30 pips, so I think it's a little bit less than 30 pips. Take profit. Let's see what we got going on here as far as take profit is concerned. We want to get below, right? This we want to get, and look, this, it almost lines up perfectly evenly. Man, I probably need to go to Euro GBP and sell. I mean, it lines up that symmetrical, just symmetrical with that spot I was saying. Look at that. This is exactly why your fibs and knowing how to place them are so important, and finding that confluence to what your fib is going to tell you about the trade, right? So to be a bit conservative again, we are going to take profit a little bit higher, right? So 89830. Did I put a second one in? How am I at 2,000? I ordered one. I don't know, but oh well. So, anyways, you guys watch me do this, right? I put in, and I'm doing this before I go to bed, right? I'm doing this before I go to bed, because I am not staying up and fortunately I'm not gonna be able to stay up and watch all this happen. So and then let me look and see. First, let me draw the fib on my phone now too. Sorry guys, I'll be with you right 1 second. I'm just making sure I got all of this. And you know what, I know I went to the wick on this one, but this is also Euro GBP. It's a little bit, it acts a little bit different. That I'm sure if you got down to the 1 minute of it, it would probably give you about the same. 89830. Alright, I'm either signing myself up to get wrecked or to, and to be honest, I'm not putting in a lot of risk. I'm not signing up for a lot of risk, right? I'm signing up for just enough. But I think these calls are just what the doctor ordered. I actually do want to pull this up and see. So if you go after the one, and honestly, yeah, you'd be more looking at the 1.27 on the Euro GBP to get just below that that point of liquidity that you want to get. So pulling it, just before that 1.27, right at that point of liquidity, playing it a little conservative, but still giving yourself a good amount of room to pull off a good trade is the point. So if we were to go here to here, I mean, you're talking 130 pips. This may be a trade that takes the rest of the week, which is why I gave myself, hopefully I gave myself plenty of room as far as the stop loss is concerned. But generally, whenever you play something like this, and and you use this as your basis, your the reason that you're using right above your 100 as your, or at least 10 pips above your 100, is because generally there's something below that that's going to prevent it from getting above there. So as you can see, if we look in a little bit closer, as this dropped, right, it probably caused a huge gap in this price. So if anything were to happen and this price does come up, all it's going to do is close this gap and then probably continue on. I don't think it's going to continue to or try to jump this gap or anything like that. So you'd be looking at a safe spot of it probably coming right around this area at the the most of your concern, right? And then as you can see, we're already in the money in this one, right? And GU, definitely in the money in this one. EU, definitely in the money in this one. So this is why I go by, I live by the teachings by the people who taught me. This is what they teach me, and this is what I go by. It served me well, and if I may see it start to have some kind of adverse reaction, I may pull a plug, call it short. I don't know, but more than likely, I think these are good trades. Again, these are my biases anyway. Before I walked into this week, I just needed to see the low. I think the lowest for this week came in pretty early. The only thing I'm worried about is the Brexit deal, right? And again, the reason I think we're going to have probably this major bias for foreign currency to go up, of course, the dollar, right? So the dollar, we all know we're printing way too much because of the stimulus package. It's going to devaluate the dollar, right? It's going to continue to go down. Another would be stocks. Okay, so the stock market also has an inverse value of the dollar. Stock markets, we know, with all the news of all the vaccines and stuff like that, you're going to see the stock market go up. Also, the commodities index. Commodities index we probably haven't checked in quite some time, so let's go ahead and check that out. If you don't know this commodities index, it is TRJ or TRJ. It's the CRB index basically. What you want to do, especially this is what I do. I'll pull 4 hour, right? 4 hour index, and then what you want to do is you also want to add actually I'll do US 500. That one's probably the better one, the CFD one. So as you can see, the commodities index, it very closely ties into the stock market, right? So, but the commodities index is generally a little bit ahead of the stock market. And if it's a little bit ahead of stock market and it's an inverse relationship to, if this is the American stock market, the American CRB index, right? So let's hide the US 500 or SPX. And let's take a look at the 4 hour CRB, right? So 4 hour CRB, we've been making new highs, making new highs, making new highs. So as the commodities get higher, right, the prices for the commodities, conglomerate of the prices get higher, it actually weakens the dollar, which means our commodities are at a better. It's better for us actually, but better that our commodities are at a better price. But it kind of hurts us in the grocery stores. The only thing I see about this is that it looks like could be at a resistance level. We're getting close to a resistance level, or maybe not. Maybe it looks like we dropped a little bit after it hit that resistance level, and it looks like we have tried to make our way back up. The CRB index, so we could see maybe stocks drop tomorrow. So I could be wrong. So if stocks drop tomorrow, which means the dollar index could go up, which means foreign currency is likely to go down. And if foreign currency is likely to go down, then everything I just called tonight could go to rubbish, right? So who knows? But anyways, if you what I want to say, or what I would like to get people to do, if you could, please go ahead, hit a like on that video. It lets people know that I'm here. If you can, share it, subscribe. I do videos like this all the time. I try to educate people as much as possible, especially on the intermarket analysis, Forex, crypto, whatever I can. I'll definitely be trying to help y'all out. So again, this is the Thomson Reuters CRB index. This has been around for as long as I can remember. And again, it's pushing new highs, and again, it's usually ahead of the curve of the stocks. So if we were to use this and then use the US 500, right, and we can use all of this to get a sense of what could happen with Forex, what could happen with cryptocurrencies, because they're all intertwined. So as you can see with the CRB index, and here maybe we'll overlay this with the CRB index instead. So as you can see, okay, so with the percentage that it has, it's showing the CRB index did jump, had a little bit of a fall, had a bit of a pullback. Looks like we had the same thing happen with the stock market. So, and then these will usually have the adverse effect of bond prices. So if you want to, let's throw in the U.S. 10-year Treasury bonds. As you can see, they are doing about the opposite effect, or if we can inverse those somehow. I don't think we can, though. Maybe what we can do is turn off the CRB and then use this and then invert scale, and then you can see the bond prices, how they kind of overlay with the stock market. A little bit more choppy, but yeah, bond prices are opposite of generally bond prices are opposite of stocks, opposite of stocks, and the CRB commodities are with stocks, and then but the CRB is also usually ahead of the curve of stocks, and the foreign currency is generally the adverse effect of the stocks. So that's how intermarket relationship works. If you never study intermarket relationship, check out like a cool like video by like John J. Murphy. He would definitely be like a good person to help you out with stocks. So another cool thing that I have learned, especially by doing this, learning how to trade for quite some time. I'm going to go ahead and leave the S&P here, right, for this. We are going to add we're going to add the NASDAQ, right? Let's get rid of all of the drawings that are on here. And then we're also going to do one more, right? And let's just take this, and because we don't need Brexit news anymore, go to Trading View, and then we're also going to check out. Should we use DJI? Yeah, let's use DJI CFD. Why not? I usually use US 30 or DJI, about the same thing. So let's get all these off of here. So actually, you know what? I don't like DJI. I forget it's not. It's 30 USD. There we go. This one's a lot better, just because it doesn't have the break. So we're at the 4 hour of all these. So one thing I've also noticed, or one thing I have been taught, is that, okay, you see how what we have here on the US 30, we have kind of this W shape, right? If you, you know, so these are all three indexes, you know, that kind of, they're supposed to at least be somewhat, you know, in direct linked with each other, right? So the US 30 is the top 30 companies, or this would be the Dow Jones, the top 30 companies, you know, of the United States. They are within the S&P 500, right? So these are top 30 companies within the S&P 500. So you're looking at this, you see this, right? And then you kind of have this top off kind of go up this way. I just do this for a specific risk on, risk off scenarios, right? So and I'll tell you what that means. So and then so now we're at the 5 minute in NASDAQ. We don't need to be at the 5 minute, we need to be at the 4 hour. And so if we look at the NASDAQ, right, and we're looking at kind of the same thing, you have that W shape here, right? If we were to draw that, let me get rid of this here, that angle of it right here, and then the same kind of angle going through here, as you can see, it's already different from this one, even though they're supposed to be kind of similar. And then if we go to the US or the S&P, we kind of have a little bit of an decline, right? And then also the same here from the tops, a little bit of an decline. So these are a little bit more parallel. So as you can see with all three of these, they're all different. All three are different, but they're supposed to represent something similar. So what this tells me is that this is a risk on scenario. Risk on scenario means that lower currency within these since these are US companies, lower currencies within the US. So this would tell me, especially looking at all three of these, this would tell me that, just kind of give me a warning that, hey, US currency looks like it's to be going down, you know, as we move further ahead, until we can get something that is going to, you know, have these, you know, basically make these. So you almost have it with this, right? You kind of have this kind of flag shape. So let's get rid of these, right? So just having that W there would say, okay, lower currency ahead, right? And then now we would be looking at what's going to happen, you know, let's say right through here. right through here. All right, let's take a look at this. We just kind of have a little bit of an upward slope, except for you have that down, and then here you kind of, so here, 2 upward slopes, but you do have some daggers on the end. NASDAQ, here you have, you definitely have an upward slope, a little bit steeper upward slope. Right, and then US 30, kind of the same thing, upward slope, but also you still kind of have the daggers. So they're all 3 moving in the same direction, but they still could have some, you can see they're all pointing down at the end. So this could be a risk-off scenario. Risk-off scenario meaning that the currency could be going up. So that could also mean a bad thing going ahead. So so we shall see. So we had you could have the risk-off scenario, which is telling you bad currency ahead. But now they're all 3 kind of pointing in the same direction, even though they might not be doing the exact same thing. We could have a risk-off scenario, meaning good domestic currency, and bad foreign currency. But I'm going to stick with my guns, right? And I'm going to stick with my guns, and I'm going to say that what my calls are going to be the better calls. Right, so here is Euro GBP. Again, I didn't exactly enter at the exact right time. If I had entered exactly where I wanted to have entered, it would have been right here, right? Where that high was, or right where closest to that 70.5 as I could have. If I'd have pulled this down a little bit, it would have been a little bit closer. Well, actually, I think it would have been right on. Yep, been right on. If I'd have pulled that down just a little bit more. But if we're gonna go body to body, at least to get in within the 618, right, in between the 618 and the 79. Again, I don't have any fears of it getting any higher than this right here, because this is the bearish order block, right? So you have it pressed down really hard before it comes up and then drops again. So this is more like a breaker order block kind of area. So as soon as price comes up, hits it, I have a feeling it'll come back down. That's if price does come up and hit it. So that's the thing. GBP USD, looks like we did have a turnaround for a second, but it looks like it's going back up our way, right? And what could be causing it to make some kind of move like that, right? So let's take a look and see over to the left, see what we got going on. So it looks like we did have 2 equal highs right there, right? See these 2 equal highs, this one and this one. Those 2 basically had 2 equal highs. So we just got above it. Okay, so we made a 3rd equal high, right? So let me get rid of these. So that's going to easily tell me we're just going to push through this. So whenever you have equal highs like that, especially when you have a 3rd, this doesn't mean that this is a resistance point. This tells me this is smart money trying to take your money. It's trying to make you think it's a resistance point. That way you sell here, right? And as soon as you sell there, it's going to push up through it, because your stop loss is going to be set right there, because you think it can't get through it. You're going to put a tight stop loss right there. Smart money knows that, and then it'll push right through it and take your money, right? It's because once you lose your money, where does that money go to? That money goes to the people that are on the other end of that trade. Who's on the other end of that trade? JP Morgan, Deutsche Bank, Federal Reserve, Bank of England, all of those big people, big banks, they're going to be the ones on the other side of that. And they're going to be the ones taking your money. So right now, it's enticing people to sell. It's enticing people to sell because it's saying, oh, look, there's a resistance right up above. Sell. It's going to get below. But like I said, if you've been paying it, from my understanding, from everything I've been seeing, all I see is liquidity. I just keep seeing liquidity ahead, and even that right there, to where you have 3 equal highs, tells me that is liquidity as well. So, and honestly, I just want to watch it happen, just so I can say, hey, see what I'm talking about. It may not happen for a minute because it's going to convince people to continue to sell. So let's see what's happening over here with the euro. Probably the same kind of action, right? So looks like it's hit. Didn't really look like we hit any equal highs. Almost some equal highs, but not really. It's just trying to form something. Again, this is still one I think could break lower, to be honest. I'm going to put it at my safe spot because it looks like here, especially if I put it at that one, it's a little bit more closer to the 80%, which is what I like. And I like trading around the 71%, somewhere around there. Which is what I did, so I feel like I'm on the safe side of this one. And it looks like it's starting to go up. Again, this is at the very, very beginning of the session, so let me see if it's come back up yet. Nope, not yet. And then Euro GBP, even though I sold late, it's still pressing down. And look, it did. Okay, see, here's that purple I was telling you about. So that was that, that fake support, right? So you had this kind of fake support area right here. Everybody, it's coming down here. Everybody wanted to buy. Of course, boom, it goes through it. So it jumps up and it buys. Everybody's thinking it's going to buy. What's it going to do? Come right back through it because it's going to sell. Right, that's what smart money is all about. Whatever you think is going to happen, smart money does the opposite. Just remember that. That's what smart money does. So everything you were taught in retail about how to trade, throw it out the window, because smart money understands that that's what you're trying to do, and it's going to pickpocket you and then go the opposite way and then make you think twice about everything, about every trade that you had, and then make you continue on until you see that your trade has gone bad, or at least you could see it break down through here and go, oh no, it's gonna sell, and then you turn around and sell right as soon as it breaks through, because you think it's gonna come back and retest and then sell, right? And then it doesn't retest and sell, and it goes back up this way, and then you switch and you go, oh no, it didn't sell, and then so you close out the trade and you start buying, and as soon as you start buying, what's it do? Turns around, goes back the other way, and then now you don't know where the seller to buy, and now you're just confused. So you don't know which one to go for, right? So this is what smart money does, right? Let me fix something here. All right. So let me see. How long are we? How long have we got into this so far? probably about ready to cut me off, to be